Hey guys, what's up? In today's daily financial market news, most markets are more risk averse. This comes in the back of a few developments over the past 24 hours. First, we got the US Fed rate cuts, which signaled towards 1.75 and also towards more potential cuts if things materialized within the coming months. Also, in the Asia Pacific session, we got reports that China was a little hesitant as to whether trade talks with the US would develop beyond the Phase 1 deal. This kind of spooked markets, and we saw quite a sell-off across the range as the session developed. Across today's major US indices in terms of the Dow Jones Industrial Average, S&P 500 and Nasdaq all are lower on the day. The S&P 500 was down 0.5%. This came on the back of the two things we've just talked about today. Also in the session we saw the Nasdaq start stronger but fade as the session developed. This came on the back of two major players reporting for the tech sector. In terms of the European session, the FTSE 100 was probably the largest mover, down 1.05%. This came on the back of two things, one being a stronger pound and the second being the general market sell-off. This will be quite a key watch, as if it can hold be above the 7,000 range, it will mean that the indices found quite strong support. Also in the session we saw the German 30, which was actually quite quiet today. It was a little negative but nothing of significance to note. This came on the back of the European data, which kind of sent mixed signals out. The European CPI was a little stronger and so too was GDP, but unemployment did rise, which signaled that one section of the euro might be doing well while others are doing just as bad. Also, in terms of the Asia Pacific stocks, the ASX 200, the Nikkei 225 and Hang Seng were all lower on the day. This came on the back of the developments we did talk about, with China potentially cancelling out after the Phase 1 deal is signed. This could be quite a key development to watch as the week develops, and we will see whether the stocks can find support before the next move. In terms of equity today, it was quite a mixed picture. Apple and Facebook were more positive on the day. This came on the back of the two companies reporting and beating earnings reports. Apple was up initially 3% in pre-trading, however it fell down towards 1.58% up on the day. Facebook had a similar move, up 5% in pre-trading but only up 3% now. This came on the back of earnings beating targets in terms of revenue and also profits. In terms of other movers, Nvidia was down more than 2% on the day. This came on the back of the tech sector starting to sell off after pre-trading had showed a little positive move. In terms of commodities, things were also quite mixed. Copper was lower on the day and so too was natural gas. This has been quite a large mover this week on the back of more upbeat demand. In terms of commodities, oil in specific, the WTI and Brent crude were both negative 1% on the day. This came on the back of a general market sell-off and also concerns on supply. We saw this kind of development yesterday with the US inventory suggesting that demand just simply wasn't there. Also in the session we saw gold rally more than 1.111%, which is quite an interesting number. This came on the back of the Fed cut signaled yesterday and also a potential risk aversion with Chinese backing out if they're not happy beyond the Phase 1 deal. In terms of bond yield, things were actually quite brutal in the bond yield market today. The US 10-year and 2-year yields were both down more than 5% across the board. This came on the back of the Fed cuts and also more concerns on a trade deal beyond the Phase 1 level. In terms of the German yields, things were down even worse. The 10-year and 2-year saw a brutal sell-off, with the 10-year falling more than 15% on the day. That's quite a large move. In terms of the UK yields, we also saw quite a similar picture. With the pound being stronger, you would expect yields to follow with the risk aversion. However, things just didn't materialise. The 10-year and 2-year were both negative on the day, with the average move being around 5% down. In terms of the FX fear, finally, and not forgetting it, is quite interesting moves today. We saw the pound dollar strengthen on the back of reports that the Brexit party could be potentially withdrawing from the election coming up for December. This will be quite interesting to watch. Also in the session we saw Labour's Jeremy Corbyn announce his bid for the election, which will be quite interesting. He did mention a few things to the voters which he thought of were important. So he did mention the NHS and the NHS again. So I think we've got the message clear, Jeremy. We're interested in the NHS. Also in the session we saw the euro-dollar little moved on the day. We also saw the Canadian GDP report. However, negative as it was, the move was kind of already priced in after the Bank of Canada's POLAS reported yesterday that the Canadian economy was starting to feel some downward pressure. Also in the session we saw the Japanese yen stronger on the day, with the dollar Japanese yen down 75 points on risk aversion. Also in the session we saw the US dollar Chinese yuan a little weaker. This came on the back of early strengthening but weakening as the session developed. That's all for today, guys. Thank you so much.